Good evening. The White House has warned high oil prices is putting the global economic recovery at risk. The US president's pressurizing the world's biggest producers to urgently boost supply. The president's national security advisor, Jake Sullivan, has said OPEC must do more to support the recovery. And the US is engaging with relevant OPEC Plus members on the importance of competitive markets in setting prices. A long, long way from a year ago. Then, as you can see from the graph, the conversation was all about negative oil. Since Brent crude has roared back to more than $70 a barrel, it's adding costs as economies come back to life. At its meeting in July, OPEC agreed to increase output by 400,000 barrels a day. Joe Biden says that's not enough.
We're taking action to address gas prices as well. Today, gas prices are lower than they were early in this decade, but they're still high enough to create a pinch on working families. We also made clear to OPEC, the major oil exporting nations of the world, that the production cuts made during the pandemic should be reversed as the global economy recovers in order to lower prices for consumers.
Dan Eberhart is the CEO of Canary Oil, one of the largest oil companies in the US, a major donor to the Republican Party. He joins me now. Look, I can't see that OPEC is suddenly going to turn the spigot on. They're terrified of a sudden fall in prices, the like of which we saw last year. Now, that might not be possible, likely, but OPEC recently said it's happy with where the situation is.
Well, I think OPEC is happy they've got control back. But what's got Biden caught a foot here is we've got a roaring economy. We've got all this stimulus money, and we've got ever-increasing inflation. And this is a toxic brew for rising energy costs, plus not to mention the green initiatives coming out of the Biden administration. All of that's resulting in an oil price that's getting carried away with itself and continuing to rise. OPEC is where it wants to be in the driver's seat. They can harvest some profits after a bad 2020. And all this is happening at the expense of consumers right now.
Okay, but the US shale production or non-traditional production, which is sensitive to market prices, if the price rises, then more wells will come on stream. The US was the de facto swing producer going into the crisis.
Yeah, so the U.S. was producing in February 2020 about 13.2 million barrels a day. Right now, they're producing just over 11. So we haven't completely brought production back, and we've got soaring prices. So I think we've really got a demand constraint or a supply constraint about to hit us in the face unless this Delta variant takes the worldwide economy down a notch.
Well, hang on, but let's stick with the US for 1 second. That discrepancy between the 11 million, give or take, today and the 13 million at peak, it begs the question, why hasn't US production come back on stream to take it to that same level as the price has risen and market forces have done their work?
Because I think, well, number one, demand has come back stronger than the oil companies anticipated, and that's a result of the economic stimulus and the economy being strong. Number two, I think the oil companies are waiting. The shale producers are waiting to see if OPEC puts the production back, and they want to be the second people to put the production back, so the U.S. doesn't put production back, and then OPEC does, and prices crash. Shale and OPEC are aligned in not wanting the oil price to crash again in 2021.
So if we look at OPEC, and we're talking about OPEC Plus really here, and the ability for countries like Russia to go along. Look, it took a lot to get the cuts. Saudi doesn't want to put too much back in again for its own budget deficits and its own budgetary problems. I'm guessing OPEC is happy where the price is and is not going to listen to what the president is saying, or at least take much notice other than pay respect.
Yeah, I don't think OPEC cares very much what Joe Biden says. If anything, they might consider it a bullish indicator. And look, OPEC is putting between 400 and 500,000 barrels a month back onto the market. So they are slowly back out of the system. But they very much don't want to see the price crash again.
Dan, hand on heart, I mean, this idea that the White House is saying OPEC with high oil prices could be jeopardizing the global recovery. It sounds a bit hyperbole to me, in the sense that we have lived with oil prices at 100, 110 in the past. We've seen them down at 20, 30, even negative in unique circumstances. 70 sounds about right.
Yeah, no, I think it's a good price where oil companies can make some money and where the consumers aren't completely bent over backwards and it's hurting the economy. Look, quite frankly, I think this is Biden looking for political cover, looking for a scapegoat. So, you know, while he tries to get this green energy initiative through, which is pushing up energy costs for consumers, he wants the sweet part of that, but doesn't want to be blamed. Energy costs that consumers are bearing right now, frankly.
Dan, good to have you from Phoenix, Arizona, where I'm sure it is absolutely boiling hot at the moment. Hot enough in New York, because I can only imagine the sort of 100+ temperatures you've got there. Thank you, sir. I appreciate